Welcome back. Here, tune into Market Fatafat, and of course, this is a show where we take you through all the stocks that are buzzing in news. And we are joined by our researcher Shesha, and we are joined by our technical analyst Foram M.Chheda, who's the founder of ChartAnalytics. Hi, Foram. Welcome to ET Now. Foram, you have picked out M&M for us today. In the last 6 months, it has given us a return of 11%. Nothing great happening on that front, but what are you penciling in on this particular counter?
Well, hi, good afternoon, and thank you for having me on the show. One is that before beginning with talking about the stock, the markets are doing pretty well, but one needs to be also a little cautious because we have the budget tomorrow. So from a trading perspective, we can witness some volatility. So now talking about the stock also, M&M, in fact, since December, the stock was forming a higher tops and but lower bottoms. So it was more like a broadening pattern. However, now in the past, I would say couple of trading sessions, that is since the beginning of this month, the stock has now stabilized at a lower level, closer to around 1,590. And from there, we are witnessing a kind of an up move. But there is a resistance here 1670, so rather 1650, so it's like a 60 point of range. But now the stock is attempting to move above the 50-day moving average, which is indicating some kind of a bullish momentum. And along with that, it is also breaking off from the highs of 1650. So overall, the stock is good. So from an investment perspective, one can consider buying the stock at current levels, and or one can look at accumulating if one has the stock, and maintain a stop loss below the levels of 1590 and look for a higher target of closer to 1720.
All right, so that's the take coming in on M&M, but keeping with the auto space, then Atul Auto has came out with its numbers, when this time the numbers look quite good when it comes to the revenue jump for the company, 16% uptick on a YY basis, and the net profit has also seen a jump of 32% on a YY basis, but it's the margins that are a little disappointing, because on a YY basis they are down from 10.2% to 8.9% this time around, while the EBITDA is almost flat on the comparison on a yearly basis. So that's the Atul Auto numbers, a good jump on a profit as well as the revenue figure of the company, but the margins are a little disappointing, and that's why we are seeing this reaction of the day's highest point for Atul Auto. But talking about the Bank of Baroda numbers as well, this time the company has the asset quality has actually improved by 24 basis point when it comes to the GNPA number as well as NNPA numbers. There's a 6 basis point of improvement on that particular front. The net interest income is actually high by 21%, NII is actually up by 2.6%, and the pre-provision operating profit is actually down by 15%. So all in all, the asset quality is seen to be improving for the company, and if we talk about the provisions, that's actually down by 72%. So Bank of Baroda numbers actually look a bit decent for as of now. But let's move forward and let's focus to one of the top losers in Nifty 50 today, and that is L&T. Shesha, take us through the numbers and what are the brokerages highlighting on L&T?
Well, yes, the company has reported weaker than expected set of numbers, and that is the reason the stock is declining. It has recovered from the lowest point of the day, but despite that, as we see, it is seeing a cut of nearly 3.5%. Results, as I mentioned, were below estimates. Revenues in line saw a growth of about 18.8% on a quarter-on-quarter basis, but margins saw a big hit this time. Sequentially also, they have declined, and below analyst expectations is where margins have come in at. As far as order book is concerned, cumulative order book stood at about 4,69,000 odd crores, and they received orders of about 76,000 odd crores, which is an uptick of 25% on a year-on-year basis. As far as company's guidance is concerned, they've cut their margin guidance for their core business, where the company said that core infra margin guidance is likely to be in the range of 8.2 to 8.5 versus their earlier guidance of 8.5 to 9%. So they've clearly gone ahead and cut their core infra margin guidance. Numbers were also weaker than what the street was working with, and hence the stock is declining, in fact nearly 4% lower in trade.
Well, moving on to another counter that's buzzing away in trade is Glenmark Pharma. Now, there are two news flows for Glenmark Pharma. The first being that Glenmark Pharmaceuticals and Ichnos Science have announced a launch of their alliance, Ichnos Glenmark Innovation, to accelerate new drug discovery in the cancer treatment. Now, according to the press statement, this alliance combines Glenmark's research and development, in the Procephesian small molecules with those of Ichnos in the novel biologics to continue developing cutting-edge therapy solutions that treat the hematological malignancies and solid tumors. So that's the first piece of news coming in on Glenmark Pharma. But apart from that, even BofA came out with a note on Glenmark. They are maintaining a buy and they've hiked the target price to 940 rupees per share from 720 rupees, and they feel that there's more steam left. Despite the rally, they focus on cost and the CDMO to support the margins and the scope for higher growth. There is scope for higher growth despite muted near-term commentary. And on the back of that, we can see Glenmark Pharma up 2.3% in trade today.
All right, moving on then, and let's go to and talk about Reliance. And Foram, how is this stock looking on the charts? Just a couple of days back, we did see this touching its all-time high levels. Once again, a record level is what we should expect for Reliance?
Well, actually, there is a very good technical breakout on Reliance. Now, if we talk about since April 2022, the stock remained in a very wide consolidation, and after almost like 2 years, we are seeing that the stock has made a breakout. And in fact, as on day before yesterday, we did see a 7% up move. That was like a clear move. So already the stock made a breakout at around 2,600. It went up higher. It did retrace in a few days back. And then we saw a very good rebound coming in. So it was just basically testing the breakout level, and we saw some resumption of an up move. So currently the stock is seeing some kind of good upside from I would say a longer term perspective. So since the stock price is coming down, wait for a level closer to around 2,750 to buy the stock and maintain a stop loss below the levels of 2690 and look for a higher target of closer to 2950.
So maybe that.
Moving on then, and let's talk about one of the top gainers in Nifty 50 today, and that is Sun Pharma, indeed one of the result candidates. And this time, once again, we are expecting the US sales for Sun Pharma to do better on the back of a good specialty sales boost. The sales is expected to see a jump of 5% on a quarter-on-quarter basis, while for the India sales, we are expecting a 8% YY growth. Talking of the number front, revenue is expected to see a jump of 9.5% on a YY basis. 12,309 crores is the expectation. EBITDA expected to be up 6%. 3,187 crores is the number is what we are expecting. And even the margins expected to be quite steady at 26%. Profit expected at 2,425 crores, and that will be a jump of 12% on a YY basis. But like the surprises that we are getting from the pharma majors, from the likes of Cipla and Dr. Reddy's, all eyes will be on the US sales for Sun Pharma as well, wherein we understand that the market share gain continues for some of their specialty drugs from the like of Sequoia as well as Illumia. So good set of numbers expected from Sun Pharma, and indeed that cheer is what we can see on the stock price as well, almost a 4% gain as of now.
All right, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back.
Welcome back to Market Fatafat, and let's take a note of Sun Pharma earnings then. And Sun Pharma has reported a good set of numbers, almost in line to what we were expecting at ET now. Look at the revenue. This time the company has reported above 12,381 crores on the top line versus our expectation of 12,300 crores. And look at the number in the profit figure as well. The numbers also look in line to what we were expecting. 25,023 crores is what the company has reported onto the profit figure. Talking about the EBITDA number of the company, that has come in at 3,353 crores, and this is versus our expectation of 3,187 crores. So a bit of a beat coming in on this particular front, and the margin number has come in at 27.1% versus our expectation of 26%. So beat coming in on the EBITDA as well as the margin figure, and also the profit figure is slightly higher to what we were expecting for Sun Pharma. So a beat coming in on Sun Pharma numbers, and clearly you can see the cheer for the stock price as well. We will wait by to get more numbers for the US sales. The press release will be out in some time from now. And other than that, the company has also announced an interim dividend of 8.5 rupees per share. And the key to note is actually the margin figure of the company, because that's expected to be quite steady when we compare the numbers on a YY as well as on the quarter-on-quarter basis. And we were expecting a slight blip onto the margin figure, but the company has surpassed the estimates, and 27% is what we are seeing on the margin figure, and that's a jump not just on a YY basis but also on the sequential basis as well. So those were the first cut for Sun Pharma earnings. A good set being reported by the company indeed.
All right, Shrishti, thank you so much for the lowdown on Sun Pharma's numbers. We'll move on. We have a management joining in. We have Mr. Vijay K. Tadani, who's the co-founder of NIIT and the vice chairman and MD of NIIT Learning System. Thank you so much for joining us, sir.
Thank you. Thank you for having me over.
Right. So, sir, you have posted strong numbers. It's been recorded both on a year-on-year basis and sequentially as well. What kind of sustainable growth numbers can we expect for the top line numbers going ahead?
Yeah. So as we had guided earlier, we are on the trajectory of second half recovery, and I think this was the third quarter of the year. And I think in the fourth quarter, we'll continue with the same trend of a quarter-on-quarter growth and very robust set of profitability. We have been able to maintain our EBITDA margins at 24%, and we also see a strong PAT growth this quarter, which is 23% year-on-year and 21% quarter-on-quarter. So I think these impacts of EBITDA margin remaining constant will, I think, be felt in the coming quarter as well. In addition to that, we have a strong deal pipeline. We closed 2 MTS contracts this quarter, new MTS contracts, bringing us to 86 that we are serving currently, and a revenue visibility of $348 million.
Mr. Tadani, a very good afternoon. This is Shrishti also joining in. Wanted to touch upon your margins. That has also seen an improvement of almost 100 basis points, and 23% is what you have reported. But going ahead, is there more headroom for margin improvement from here on?
No, actually, we are ahead of our margin goals. We had guided for 20% margin. Our goal has been 2020, which is 20% growth and 20% margin. This year, I think across the quarters, our margin have been on a higher end. And one of the reasons is by which is contributing to this is cost containment and the product mix. So I think 24% is an appropriate margin for us to continue to be with. In fact, it should come down as we have a little more in the next year as we invest more in growing the business. But at this point of time, we are retaining 24%.
Tadani, the company has also added 2 new MTS customers. Any bigger client additions expected over the next 2 to 3 quarters? And which are the sectors, these client requests are really coming in from?
Yeah. So first of all, we have been adding regularly new MTS logos in our repertoire, given the strong market position we have. And now I believe we are amongst the top 5 in the world. So therefore, we get invited for all the RFPs as well as expression of interest. And our win rates are extremely high. And we believe that we'll continue on this trajectory. As there is a volatility in the environment, more and more organizations are looking at utilizing the services that we have to offer, which is to deliver an outcome-based, more effective and efficient way of learning that the organization needs. The environment also is contributing by the new trends in artificial intelligence, AI, as well as digitalization that the companies are going through. That throws up higher demand and the change management which is associated with it. So we think we are into a good run as of now, and we should see the business growing quarter on quarter, as I guided earlier, as well as add new logos as we go along.
Mr. Thadani, with this, we'll let you go on that. Thank you so much for joining us today on ET Now. So that was the management of NIIT Learning's positive on the growth outlook ahead. And as of now, the stock is holding up to the gains of 8%. But with this, viewers, we are completely out of time in this edition of Market Fatafat. It's a goodbye from me, Ankita, as well as the whole team who put this show together. Thank you so much for watching, but don't go anywhere. Closing trades will take the action ahead.